Good morning, everyone, and happy Thursday. So we have a couple decently important news articles this morning, and it starts out with Uber. So Tom, Uber stock is blasting to the upside this morning. It closed around $33 yesterday, at close obviously, and then just a couple minutes ago, it was as high as $35.50. Now it's only around $34.60, but still, it gapped up around 5%. And then, Tom, I think you're muted, just so you know.
Hey, there we go. But like you said, there was some good news that came out. I was just getting it from CNBC here. You can see Uber stock jumps as they're going to be adding taxi rides into Uber's app in New York City. So that's pretty big. You know, I know that taxis in New York have been pretty upset that a lot of these different ride-sharing apps have been stealing their business and stuff. So it's really good to see that they're going to be allowed to be on that app, but it should also help Uber, Mike. And as we can see, Uber's doing very well today. Really broke out above this double top of this week, right around 33.60. So we had a nice move there, and we are pulling back here at market open, but overall though, pre-market was great.
All right, good stuff. So looking across the market overall, what are we seeing today, Tom? Are we seeing upwards momentum? Are we seeing breakouts? What's going on?
Personally, I'm not seeing anything crazy. I think that this move back up might just be normal price action. You know, the SPY sold off pretty big yesterday, and we ended up moving below that 446 resistance there, or support. And then today we kind of came back up, retested that resistance in pre-market. We did have some prints above it, but now that the market opened, we're starting to dip right back below 446. So personally, I think that we could still see some more selling pressure come in today. I know yesterday was a pretty big consolidation day after we had like 5 straight green days in a row. So looking at the market here, I think that even though we were green in pre-market, I don't see a straight up explosion or anything. I think we'll continue to see some consolidation from like what we saw yesterday.
Right, sounds good. Yeah, I mean, like you said, there's not like a ton of momentum in either direction like this second, but you know, the market's holding up in a decent way. Another stock that's moving up, Tom, is Spotify. This one is up around 4.5%, and they actually had some news with Google. Basically, Google is letting Spotify use an alternative payment system, and apparently it should be really good for the company. So that's good to see. Spotify has been on like a pretty bad downtrend over the past couple of months, like if we go to a daily chart really quickly. But then again, all like growth/tech stocks have had like similar movement. But if we go to like a max weekly on Spotify, overall it's in a decent uptrend, but literally for the past like 2 years or so, it's been all consolidation.
Yeah, it really has, and it's been pretty tough, Mike. Like I know that these stocks, like whenever they consolidate, sometimes they consolidate for a long time, and you know, we can see whenever Spotify was at these levels back in 2019, you can see how it just stayed right around like $120 and $150 pretty much all year long that year until we finally broke out in 2020. So it's definitely a stock that can consolidate, like you said, and definitely be careful with it. But as of right now, it definitely has some good momentum, at least this week. I was glad to see it break out this morning, Mike, but it looks like it is pulling back now here at market open. I guess we're seeing a pullback out of a lot of stocks, but still, it's definitely coming back down towards that low of yesterday.
Yeah, true that. Alrighty. Tesla is also popping up on my radar this morning, Tom. It's up 1.6%, and it just keeps going higher. So Tesla has had 1, 2, 3, 4, 5, 6, 7. This is going to be the 8th green day in a row. That's impressive.
That really is. We don't see that happen all the time, but hey, if there was a stock I had to pick that could do it, it was definitely Tesla. With the way we've seen them run up in the past, it's definitely something that, you know, they can go on some of these crazy uptrends like this, but I would never expect 8 green days in a row like this. Sometimes, you know, like their last uptrend here in October, you know, they had a couple of red days sprinkled in, but this one was just pretty much straight up explosion. And I thought that was really good news, how Tesla cut the red tape at that gigafactory in Berlin. That's going to be huge for them. And for them to add 500,000 vehicles to their production total will be huge if they do end up meeting that goal there.
Yeah, you know it. All right, so we have Raymond saying China stocks bombing at opening bell. Blasting, let's see. Alibaba, Yeah, they're down like 2.6%. They're definitely taking a hit, Tom, and we can see selling pressure definitely coming in, but then again, over the past like 6 trading days, this thing went from like 73 up to like, what is that, 120? So we're talking about Alibaba. So it's like, in terms of percentage terms, Tom has it pulled up 71% in, what is it, 6 trading days? It's crazy.
Yeah, that really is. I wasn't expecting it to be that high, but wow, 71%. I know we keep talking about Square, which rose up 50%, and they're also consolidating a little bit, but that just goes to show you guys that these stocks had some pretty big moves here over the past week or so. And these, like Mike said, a 71% move is just insane out of a stock like this, especially over only like 5 or 6 trading days. So that's huge. Definitely expect possibly some more consolidation or another pullback today. I could see it continuing to sell off today, Mike. And, while the momentum is slowing down, I still think it's in a nice bullish setup. We just are having some normal price action here back to the downside. You just can't go straight up forever. And even Baba had like 8 green days in a row, Mike. They had a pretty good chart too.
Yeah, true that. All right, so let's see. We have I Am Mike saying Facebook above 217. Let's take a look. Facebook.
Ooh.
Yeah, I mean, it was trying to run up. I mean, it is, it's definitely trying, but I feel like it's kind of in that same setup with like Baba a little bit. Like, of course, it's not up nearly as much as Baba is, but I still feel like a lot of these growth stocks are just a tiny bit overbought in the short term. So I would not be surprised if Facebook just slowed down just a little bit.
Yeah, exactly. I wouldn't either. And, we got up to a huge resistance with Facebook around $220. We can see when I go to the 1-hour chart here, you can see we bounced off of 220 multiple times, especially back in like the beginning of February and stuff like that. So 220 is a pretty big level. I was glad to see Facebook get back up to there, Mike. Even they, from the low to the high, had a pretty good percentage gain here. Like, let's see what that was. So their percentage gain was right around like 19 to 20% there. I would say like more like 18%. So it's definitely a pretty big gain for Facebook. I know they're a big company, Mike, and honestly, this one seems like a really good longer term play to me. In the short term, like you said, I think it might start slowing down, but man, with this one, I just think getting shares and holding for the long term will be the way to go, especially with how they're getting into all this metaverse stuff. I think that their metaverse potential is huge, Mike. And, they've been getting into those VR headsets and stuff like that through Oculus. So that's going to be huge for them.
Yep, I'm with you, Tom. I own some Facebook for the long term, and I do not plan on selling. So it should be good. It's at a pretty good level. But looking at some other plays right now, Tom, checking back with AMC. This one had a ton of hype yesterday. It's down like 6% today. So what are your thoughts on this price action, and what are you seeing?
Yeah, I don't like what I'm seeing right now, Mike. We just blasted through that $20 support, and we're moving down in a pretty big way. So I hope AMC can start to slow down or recover and go back up. Just like, though, with the rest of the market, AMC has also had like 1, 2, 3, 4, 5, 6, 7 green days in a row. Like, they've also been on a crazy uptrend. So with them, it's another one of those scenarios where we're up so much that you just have to expect some pullbacks and some consolidation. And I think today, that's definitely what we're seeing. I'm sure a lot of retail traders might have been trading this the past few days, and I'm sure some people are looking to take some profits here. So I would not be surprised if this one continued to go lower or slow down also. But at the same time, keep in mind, AMC's had a lot of renewed momentum, so maybe we'll bounce off of like the $19 support or something like that and start ripping back. But at least for right now, Mike, we're falling in a pretty major way below 20.
Yep. Alrighty. So then with the next comment, we have Sean saying, thoughts on UNP, so Union Pacific. This has a lot to do with railroads and stuff like that. It's not necessarily a play for me. The stock has been very consistent, though. They are a profitable company. My concern is that I'm a little bit nervous about the industry that they're in. Like, I don't think, the railroad industry is going anywhere, but obviously, like, it's probably not going to grow at, like, a great, like, pace, especially compared to a lot of these other industries. Also, I'm looking at Union Pacific's revenue each year for the past 10 years, and it has been slowly declining actually. So it's like that is concerning that their revenue is slowly declining, but their stock is blasting up, you know? So it's like they print money. They are very very cash flow positive. So it's like it's a tough one in the sense that like their stock is blasting up. They pay a decent dividend. Their earnings are nice. They have good cash flows. But then again, like their revenue is slowly declining. So this one's really, really tough. I don't really follow this industry at all. So it's definitely not for me. But for trying to like, I don't know, Tom. It's a tough one. You know, like what do you think?
Yeah, I've done a lot of research on these railroads, especially like back in college for like business school. Whenever I was researching up like Carnegie Steel and all these big railroad companies and stuff like that, I definitely learned a lot about them back then. But you're right, like right now, Mike, I feel like that the railroad industry just isn't the best industry to be in. I will say though, the stock's doing very well. It's exploding, and who knows, we might have some nice renewed momentum here as it breaks all-time highs. So definitely keep that on the radar, or I think it's all-time highs at least. Let's check yeah, it is all-time highs. So that's good to see. But either way, Mike, it looks like it's starting to break out here on the daily chart. Like you said, I don't think it's the best sector to be in. Now, who knows? Maybe they'll come out with some like electric train engines or something eventually, Mike. I honestly would not be too surprised if something like that happened. But in the end, though, I'm kind of with you. I feel like it's just an older industry. I'm happy to see the stock doing so well, to be honest. This chart kind of blows my mind, Mike. Like I would have never expected Union Pacific to have this type of movement. I know trains are still pretty big in shipping things across the country and stuff like that. So obviously it's a sector I feel like, Mike, that's slowly phasing out, but it's obviously still used a lot, especially in the commercial business there. But either way, I think it's a decent stock, and it's definitely interesting. I haven't looked at a railroad like this in a long time. So very interesting to see it at these highs like this. I would have never expected that.
Yeah, it's a tough one, Cornish, because like it's very consistent in terms of stock price action, but it's really concerning to see their revenue not only like not grow, but actually decrease over the past 10 years. And like that's including like inflation and all of that stuff. So like that's definitely a concern. But either way, I mean, their stock is just blasting up. They are very profitable. They print money, so it's a tough one. So I don't think you could really go wrong with it if you wanted a little bit just for safety, but we'll see. So great question, Cornish. Let's see. Then we have Carlos saying thoughts on Uber. So Tom, obviously we covered this one earlier in the stream. It's up almost 5% today. They had that deal with like taxis in New York. I feel like it's a decent momentum play for the short term.
Yeah, I think so too. It could be. And, you know, they are dipping down here today, but they came back down. They consolidated right along that $34 and like 25-cent support. You know, there's been a lot of bounces right around 34 to 34.50. So I'm glad to see them bouncing there intraday today. Maybe we will see a renewed push back to the upside now that we had a little bit of consolidation. So definitely keep it on the radar. I hope that it keeps going up, Mike, because whenever it was flying up this morning, I thought that news was pretty good coming out of New York. Like obviously it's a big win for the taxi drivers, but I feel like it'll also be pretty good for Uber. And, you know, I know that like the Uber like rides and stuff like that have been getting more expensive as time goes on. Obviously, like the inflation is not helping it, but hopefully this helps Uber get a bit of a boost. It looks like it is so far today. And let's check out Uber on the daily chart, Mike, because I know they've been flying to the downside with a lot of these growth stocks, and yeah, it looks like they're really hot. They're really off their lows here. Like they were honestly cut in half whenever they were around $30.
Yep, true that. All right, and then we have I Am Mike saying there goes Facebook getting out here. Yeah, Facebook's really running. I'll say it. It's definitely blasting up.
Yeah, I hope we're able to break above 220, Mike. Like there's been so much consolidation around there this week. I really hope to see a nice move. So far today, we are having that type of momentum, so hopefully we see it come up and break through that. It would definitely make for an amazing move on the chart. You can see 220 has been big for Facebook over the past few weeks. Even whenever Facebook first tumbled with that bad earnings report, they started consolidating a couple days later, right around 220. So definitely keep it on the radar. Hopefully we see that nice explosion. And, you know, Facebook, we've been talking about it for a long time, Mike, and I hope we see it finally recover back up. And we're starting to see this recovery happen with a lot of stocks, whether it's Facebook or Enphase or Square or what have you. It's starting to really come up off the lows. And Enphase, Mike, has been really on a good tear. Like look at Enphase. I know it's not necessarily killing it today compared to this week, but it looks like it might come up and retest $200 soon.
Yeah, it's running, Tom. It is running. I like Enphase for the long term. There's a lot of good like solar stocks out there. Like I know RUN is decent, and I know you watch FSLR sometimes too.
Yeah, FSLR can be pretty interesting sometimes, just like Enphase. I will say though, like looking at the chart, Enphase seems like it's recovered up a lot more than FSLR towards its all-time high. So that makes me feel like it might be a little bit stronger. But either way, if one of them goes up, generally they both start rising, at least in the longer term. So hopefully we see both companies and just the solar sector overall start to kill it. Yeah, you're right. RUN is also doing very well. So yeah, I'm glad to see these stocks running, Mike. And I'm looking at my watch list today, and a lot of these types of stocks are moving, whether it's RUN or Blink or CHPT or Tesla. It seems like the clean energy sector is doing great today.
There we go. We also have CLF rising higher by the minute too. This one is up 6%. We just broke above that $30 resistance level, and we're just under 31.
Wow, this one is really going, Mike. CLF. I know we've talked about this one a lot with the commodities lately, and man, they are really flying up here. I mean, this extension up today is pretty nice to see. Let's see, CLF. I wonder how those potash plays are doing, like MOS, and even MOS is moving up, Mike. So we're seeing a lot of these plays that follow commodities doing very well. Let's see /ZC for the corn futures. Actually, corn is starting to come back down a little bit. /ZW for wheat. Wheat's coming down. Let's go check out the gold sector. It looks like GLD had a nice pop this morning, so gold is still on the uptrend. I will say, Mike, gold had a pretty good day yesterday. I think it went a little bit under the radar too, because gold really exploded, and the S&P 500 has just been really flat, but GLD just keeps moving up, so maybe that shows that there's still some fear here.
Awesome. Yeah, I still think gold and silver will be pretty good over the next couple of years, with everything to do with inflation and just as investors hedge themselves. I feel like gold and silver are at some pretty good levels.
Yeah, they really are, and like you said, they're good hedges against inflation, which is always good. And I know a lot of people have been talking about maybe getting Bitcoin a lot lately as a hedge against inflation too, but we can see Bitcoin's just been moving kind of like some growth stocks, Mike. It hasn't really been moving back up in the way that GLD has. So I don't feel like that Bitcoin's a good way to hedge against the market. I know we've talked about this a few times. I just wanted to touch on it because I just keep seeing people talk about it. So I definitely wanted to hit on it for just a second. But looking at Bitcoin today, even Bitcoin's having a decent day, Mike. Like it's coming up, and we're definitely holding above 40,000 in a good way. So I'm glad to see that. I wonder how Mara and Riot look. And they were doing pretty good earlier this week, but so far today, they're just starting to turn back over a little bit. But Mike, I will say one stock that's catching my eye today, or a few stocks actually, are some of these chip plays. And I know Logitech isn't a chip play, but I wanted to bring it up because look at Logitech this morning. They had a huge gap, ran all the way up to $75. I'm not sure if there's some news that came out with Logitech or not, but they're having a great move. Intel is having a very explosive morning after NVIDIA had some great comments about their company yesterday. And even NVIDIA itself, Mike, is starting to rip up. So these chip stocks are definitely doing well. AMD's lagging behind a little bit, but it's kind of following NVIDIA up here.
Huh. Let's check out Intel. I want to see that one more time. Yeah, that's pretty good. Over 3% in one day is pretty big, especially for Intel. Like I know AMD and NVIDIA will just have a 3% day just normally, but Intel, normally it's a little bit slower.
Yeah, it really is. I just pulled up the news here to see what NVIDIA exactly said yesterday about Intel, and they said that they looked to explore Intel as a foundry for making their chips. And that's pretty big because, as we know, NVIDIA is huge with graphics cards, and if they outsource their chips to Intel, that is going to be huge for Intel. Obviously, we know Intel has been making new factories in the United States and stuff like that, and he also said that he was very pleased to see the way Intel has been dealing with everything going wrong with them lately. So I know he was making some pretty good statements yesterday overall. These are some of the quotes here. He said, they're interested in us for their foundries. We're very interested in exploring it, he said. However, foundry discussions take a long time, and it's about integrating supply chains, and it's not just like buying milk. So obviously, there's a lot of stuff that goes into this, but in the end, it's nice to see that NVIDIA is looking at Intel for this. And I know that AMD is a pretty big competitor to both Intel and NVIDIA. So to see them two working together against AMD is going to be pretty interesting here.
Yeah, good point. All right, Tom. Leading my watch list, we have LOGI. This is Logitech. I like this one for the long term. They are up almost 5% today, which is pretty big. Basically, they got upgraded by Bank of America, so they got a buy rating and a price target of $107. Right now, it's at $75. So either way, I've been holding this one for the long term. Either way, but yeah, I like it. And it's nice to see it up a good amount.
Man, I'll be honest, Mike, I really love this stock, and I like Corsair stock too. And I know we talked about this a lot in the past where we were comparing these two companies and which one's better. Obviously, Logitech is a little bit more defined here. It's been around longer, and I think they have some better cash flow. I'll be honest, Mike, like I'm holding some Corsair here for the longer term. I'm really thinking about cutting that and grabbing some Logitech, especially with this upgrade. I think I might actually do that after the stream. So that might be a pretty big thing there, but I know that Logitech has been a pretty big company. They're in that gaming industry, and they make a lot of computer parts, which, as we know, that sector has been booming. So hopefully we see Logitech keep recovering, and for them to get that upgrade, I think that's pretty telling, Mike. And they might not exactly fly up here over the next few days, but hey, I mean, that's always good to see that they're getting some renewed momentum.
Yeah, I own Logitech and Corsair. They're both very similar companies. They compete against each other, and I believe that both of them have a lot of growth potential over the next, 3 years, 5 years, and 10 years. I love them both. Logitech is a little bit more established. Like you said, they have better fundamentals, but I'm just holding both of them because I think they'll both do well.
Yeah, I think that would probably be a good way to go. I'm just trying not to overexpose myself to these types of plays, but yeah, definitely, I know what you mean. They both should do pretty decent. Looking at Corsair's chart, even they're having a pretty good week. They're bouncing a lot off this $17.50 support. They actually popped back up above $20 this week, which was really nice to see. I know my average is like $19 and something, so to see them flying up like this is nice. And honestly, I've been holding Corsair so long, it's going to be tough to cut them. So I might just get Logitech just like you did, Mike, because I've been holding Corsair so long, sometimes it's tough to cut those. Yeah. Especially whenever you're not cutting it because it's doing bad. You're just cutting it to maybe get into something else.
True. I mean, what you can do is you could sell half a Corsair and then just take that money and put it in Logitech.
Yeah, true that. Yeah, I definitely could. That would be probably a good way to go. Good idea, Mike. That'll probably be what I do then.
Yeah. All right, good stuff. We have Keisha saying GIS is moving. Let's take a look. GIS up 2%. It looks like it had earnings the other day, and it's running up in a good way. General Mills. It's a pretty slow-moving stock, and a 2% update is pretty big for a company like this.
Yeah, and it had a pretty big move to the downside recently, Mike. It looks like, what's the exact date here? On March 8th, this stock had a nasty red day, and it's recovering all the way back up to those highs there. So I'm glad to see that. They had a good earnings report yesterday, so that's awesome, Mike. I'm glad to see him recovering back, and honestly, I could see this one maybe going on a pretty nice run here, especially given that they're one of those slower moving value plays. I feel like that with that good earnings report and with the momentum, we might come up and retest $68 or something like that.
All right, good stuff. And then we have Jimenez saying Tesla. Let's take a look. TSLA. It is slowing down, Tom. It's definitely slowing down. It was up a couple percentage points just a couple minutes ago, but it looks like the tide's turning a little bit. This one's a little bit exciting. If we see a break below support, I feel like it could be decent for some put plays or maybe even a call credit spread or something like that. Because I don't love buying Tesla options because they're just so they're so overpriced most of the time where it's not even worth it. So maybe I'll sell a call credit spread or something like that.
Yeah, that might be a pretty good way to go. And looking at Tesla, it's definitely a little bit overextended here. That IV it's been on the rise. It's not the highest it's been the past year, but it's definitely like in the middle of the range. So at least you could collect some pretty good premiums for that. But yeah, I mean, I definitely could see this one consolidating for a couple days. We just passed above 1,000 yesterday, so maybe if we hold up above 1,000, it'll continue to do well. But Mike, I feel like that we're just gonna see a couple of red days, kind of like what we're expecting with some of these growth plays. Like we're finally seeing like DraftKings pull back a little bit, Square pull back a little bit. I feel like Tesla just needs to come down. Obviously Tesla's a powerhouse and it goes on these crazy runs. So out of any stock in the market, I would think Tesla has the potential to continue more than most of them. But in the end, I feel like we just need to see a couple of consolidation days. And kind of like what we say sometimes, Mike, it's almost like, is it worth the risk? And I feel like longing it right here it's just not the best time right now.
Right. Yep. All right, so I'm just doing a couple quick scans to see what else we have moving. I know Cornish mentioned CLF, and it just keeps going higher, Tom. CLF is now up 6.6%. I don't know about you, but to me, it does look a little bit overbought.
Yeah, same. I mean, it's really running. It's up. Even today, intraday, it's overbought. It's up 6 point something percent. That's pretty big for a stock like this. And you can see that lately, Mike, CLF has been having these big moves up at market open, and then it likes to start consolidating. So as it moves up, I'm definitely going to be waiting for it to slow down at some point, but it just continues to keep going. I mean, even as I talk, this candle just kept extending up. So it definitely has a lot of momentum. I wonder how some of these other commodity plays are, kind of like X or like US Steel. Looks like US Steel is definitely having a good breakout above that high of yesterday. So this is another good one that's running. And I'm trying to think of like maybe another one that follows. Like I'm trying to find like some of these uranium plays, Mike. It's CCJ. Oh, they're kind of pulling back today. We have UUUU coming down. So it's kind of mixed, but hey, CLF is really going. And I wonder how the oil plays are. ZOM actually did pretty good, Mike. Let's see, Oxy. Oxy's not doing the best, but for some reason, Oxy was falling down a lot yesterday too. But either way, Mike, it's cool to see these commodities continue up, especially in CLF's case. Like I said, though, the oil plays are kind of all over the place.
Gotcha. All right. And then we have B saying CIBR and DFEN bye-bye. So CIBR, B like boy. So looking at this one, I was just talking about this one yesterday, Tom. This is if I remember correctly, a cybersecurity ETF. And yeah, let me just double check because I remember talking with, I think, John in the Discord yesterday about this. Give me 1 second. Let's see. All right, yeah, so I'm pulling up some of the messages from yesterday. Basically, CIBR, cybersecurity ETF, it's been doing very well over the past couple of years. Like, if you check out that max weekly chart, Tom, it's very, very consistent, and it has been growing continuously. So it's like, it might be worth looking into. Like, I'm gonna take a look at some of their holdings right now.
Yeah, I was actually curious in the holdings, Mike, because I know there's been a lot of huge cybersecurity companies lately. Like I believe CrowdStrike's one of them, and even CrowdStrike has been bouncing off a really good support at 150 lately. So it's nice to see a lot of these cybersecurity companies coming up, and that should definitely make that ETF do well. And I love the name of that ETF, Mike, CIBR. It's kind of like cyber, It's kind of a cool name.
So some of the largest holdings are CrowdStrike at 6.5%. That one's been pretty good. Some other holdings are PANW with like a 5.9% weighting. Cloudflare, which is NET, which is like 6%. Cisco's in there at 5.6%. Zscaler at 5.6%, so ZS. And then Splunk, SPLK at like 3.4%. So those are some of the top holdings.
What was the second holding you named?
PANW.
PANW, yeah, this one, I've heard about this one a lot the past year. Out of all of them that you named, Mike, this one has been really running up lately, which is cool to see. I know that a lot of them were kind of consolidating, but man, Palo Alto just continues to explode. I mean, this stock is really going, and wow, it's been moving a lot. But yeah, I mean, cyber's definitely a pretty cool ETF there, Mike, and you're right, it's done very well, and I'm glad to see it moving like this. So I feel like for the longer term, it'll be a pretty good pickup. We did just touch resistance around 53, but hey, if you're getting it for the long term, averaging in is never bad.
Yeah. I'm gonna add this one to my watch list just so I have it like on watch in the background. I just added it because I wouldn't mind owning this one for the long term if a good opportunity presented itself. I just had to look more into the current valuations of some of these cybersecurity stocks. Like, for example, PANW, the stock is running up in a very, very good way. Over the past couple of years, it like tripled in valuation, which, is good. I'm just curious on how their revenues and profit have grown over that period too. So I'm going to take a look at some of these fundamentals a little bit more, but yeah, good stuff. And I probably will buy CIBR at some point in the future.
Yeah, definitely. Actually, this recent pullback didn't look like a bad opportunity if you could have got in maybe around like 44, 45. But yeah, right now I'd probably wait a little bit also. But yeah, looking at a lot of these stocks, Mike, like PANW, that's crazy to see how much it's up. And, kind of like what you said, it's going to be very important to gauge these valuations right now because look at how much they've ran. They ran from $200 back in COVID. They were actually lower at the lows, but we'll just say like middle of the range, somewhere like $200 up to 600. Like, Mike, that's a huge rise. And, we keep seeing stocks fall down after having huge rises like that, kind of like how Zoom had a crazy move. And, lots of other stocks had some pretty insane moves lately, and they started tanking back off. So I think that's important to look at with PANW. And I'm not saying PANW is going to fall off like Zoom did, but at the same time, you always have to keep this in your head because they've been going up so much the past few years. If they do start consolidating a little bit, you might see them go all over the place. Like, I wouldn't be surprised if they came back down and retested 500 or something like that.
Yeah, true. All right, and then Square also mentioned DFEN. So let's take a look at this one. Let me pull up the holdings. DFEN.
I've heard this one a lot.
Yeah, let's see.
Especially lately.
Let's see. All right, so it looks like some of the top holdings, as you'd expect for a defense ETF. We have like NOC, GD, LHX, stuff like that. I'm pulling up the full list right now. Let's see.
Do they have Lockheed Martin in there?
I assume that they do, but I'm pulling it up. Okay, so it says top 10 holdings. Yeah, okay, so top 10 holdings. We have Raytheon at 21%. We have Boeing at 18%. Lockheed at 5.4%. NOC at 4.8%. And then General Dynamics at like 4.7%. And yeah, those are like the main ones. And like I said, LHX as well. But mainly like Raytheon, Lockheed, and Boeing.
Yeah, and Boeing had a way bigger weighting than Lockheed, right?
Yeah, it really did. Like 18% on Boeing and then 5.4% on Lockheed.
I'll be honest, Mike. I feel like that whoever created this fund made a bit of a mistake grabbing that much of Boeing. I mean, I don't know when they got it, so I don't know their average price or anything. Who knows? They might have gotten Boeing at $100 for all I know. But in the end, though, I mean, it's pretty crazy to see how much DFEN fell during that COVID crash, Mike. Like, look at this. It fell from 72 down to 5, and it's just been consolidating around 23. And on the other side, we're seeing stocks like Lockheed do very well, along with General Dynamics and Raytheon and stocks like that. So I think that they overweighted in Boeing a little bit too much, in my opinion, especially considering how much Boeing is impacted by the commercial sector. So that definitely, Mike, is a little bit worrisome for me with that ETF. But I will say for the longer term, it definitely seems like a pretty good play. I mean, it's pretty telling to see how much DFEN fell there right there. I mean, obviously it's easier to look at after it happens, but man, that was a pretty high weighting with Boeing there.
Yeah, and also, Tom, this is interesting. So it's also leveraged. So it's 3x leverage. So I think that's kind of why we. You know what I mean?
That's definitely probably why.
Yeah, and I just realized it too because I'm looking around on this ETF website and it's like, all right, it's bull 3x daily leverage. I'm like, oh, that's why. That's why we saw a drop from 73 down to 5 when COVID hit. And the reason that the stock is not back up to, let's say, 50 or something is the way in which like stocks like Boeing, Lockheed, and Raytheon moved. Like, yes, Lockheed, Raytheon, and all these other ones moved up a lot over the past like month or two, but for the most part, they've moved very slowly, which is not good for a 3x leveraged fund. So
Yeah, that makes sense actually.
yeah, so that's interesting. It's like it's not bad, but like my concern is like if you're jumping into DFEN right now to like let's say play the hype with all the war stocks, it is a little bit concerning to see how high of a weighting Boeing has in there. You know what I mean? Like if I really wanted to play the war stocks or defense stocks, I really wouldn't want leveraged exposure to Boeing, which isn't really doing much.
Yeah, go check out ITA, Mike. I was looking up some other ETFs. I didn't get to see the holdings, but I looked up ITA. Seems like this one isn't 3X, and you can see on the chart how they really recovered up a lot better. They're actually almost back up to the COVID highs. They're not quite there, but you can definitely see the difference with this one not being 3X, how it's moving up a lot more, and especially lately it's been popping back more.
Yeah, I like this one better. So check this out. The holdings, we have Raytheon at like 22%. Like you said, it's not leveraged. Lockheed Martin at 15.5% with Lockheed. And then Boeing at 7.4%. And then we have Textron, which is TXT, at 4.6%. So those are some of the major ones. And they also, of course, hold General Dynamics and Northrop.
Yeah, I think that one has a little bit better weightings. It still does worry me that they have such high weightings like with Raytheon and stuff, but hey, at least Raytheon's been doing good, so at least they picked a good one for it. But still, I mean, that is still a little bit high on the weighting. I might even try to find another one that isn't weighted that high towards Raytheon or something like that, but I definitely like it better than DFEN. Man, DFEN's chart was crazy, Mike. It was really falling off. Like, look at ITA. It's almost back up toward that pre-COVID high. And we go look at DFEN, and man, I can't believe how low this one stayed given that it's leveraged like that.
Yeah.
But hey, at the same time, if Boeing starts ripping, this one might be a pretty good play. So, definitely keep it on the radar. It's not necessarily that it's bad. If you catch it at the right time, it'll definitely make for some good movement.
Yeah, for sure. All right. So let's see. So we have Vicky saying Uber made an agreement with the Taxi Association or something of the kind. It's up nicely. Yep, so the Uber news is it's pretty big. Yeah, we covered it a couple times already, but the stock's up a decent amount. Tom has it pulled up here. Uber reached a deal to list New York, basically New York taxis on their app, which should be pretty big. I know especially in times where it's hard to find like workers, and like active drivers. This should be a pretty big win for Uber and the taxis, because the taxis get all of the added exposure while Uber can offer more reliable drivers.
Yeah, and that's going to be big. I know, Mike, whenever I went to Vegas a couple years ago, the taxi drivers I had were pretty upset. They were all complaining about Uber taking away everything and everything like that. So kind of good to see them working together. Hopefully this just helps everybody in general. But honestly, Uber's stock needs something to happen, Mike. Like, look at this thing over the past year. I'm not going to blame them because all the growth stocks have been down, but they fell from 61.50 down to 28.28, over 50% there. So you're definitely going to be getting it at a good discount right now at $34. You're not getting it quite at 50% right now, but at least you'll be getting it at a really low price. And I think it'll be a good long-term play, Mike. Like, if we see these other growth plays recover, I think Uber will be another one that should do pretty well. And I'm kind of curious to see, Mike, how Lyft is doing. It's been a long time since we talked about Lyft, and let's check them out. They actually had a bit of a dip down this morning, and it looks like as of right now, they're just not doing anything. So we'll have to see how this ends up affecting them. But initially, they were kind of moving off the news too.
Interesting. All right, and then checking back in on some of these like not hype stocks, but stocks that are active today. It looks like Nvidia is still on the high ticker. That one's blasting up, and it's right at its high of day, and it's almost up 5%, Tom.
Yeah, it is. I mean, it's really exploding here. This is a big move for Nvidia. They double topped earlier this week around 272. So looking at Nvidia, hopefully they keep going up, Mike. It's really getting explosive. I'm not sure that they'll be able to break out. Like you said, they're already up 4%. If they did break out, that would be awesome, but I just don't see them going up like 8% or anything like that. But who knows? They're a big company. They definitely could. But yeah, looking at them, they're exploding. I wonder how Facebook's doing, Mike. And wow, Facebook actually got up above 220 for a second. So that's great to see with them. I know a lot of these other stocks, like we talked about earlier, like Enphase, are also starting to come back to the upside. So I'm glad to see a lot of these stocks still doing well today. And my watch list is, it's mostly green. I will say, though, there is still some stocks in the red, like Neo and Roblox and Baba. But in the end, though, I'm still glad to see a lot of these other stocks moving up, which is good. Even the safer movers, Mike, like McDonald's and Walmart and KO seem like they're doing well again. It seems like every day these stocks are having some pretty decent moves.
Yeah. Alrighty, Tom. Well, we covered basically all of the top movers today. You just read my mind. I was just going to bring up Intel again. I'm just very surprised with Intel's movement. Almost a 4% up day is pretty impressive for a company like Intel. Like, guys, this stock normally doesn't move at all, but it's definitely moving.
Yeah, it is. It's having a great day. And I will say, Mike, Intel on the daily chart, you just cannot go wrong with this $43.50 support, or you could say $43.50 or $45, anywhere around 43 to 45. There's been multiple bounces with Intel. You can see I drew a bright green line on the chart. And I'll be honest, I've played this line 2 or 3 times now, Mike. It's kind of crazy how many bounces I've seen on this. So it's pretty good. But either way, Intel's flying up today. It had that really, really good news with NVIDIA yesterday. For NVIDIA's CEO to say anything positive about Intel is great. And for them to possibly consider Intel to make some chips for them, that's even better. So I think I'm really glad to see Intel flying along with NVIDIA. AMD is not really doing the best. Of course, AMD might even take a bit of a hit, Mike, because these two companies working together will be crazy. And, they're not working together yet. They're just talking about it. So we'll have to see if anything really ends up even happening. But hey, at least he's making some good comments, and it's definitely making for some nice price action. I will say, Mike, I wonder if Intel will get some hype back, because I know AMD has been the stock to be in for the past 2 years. And I really wonder if maybe their hype's going to start slowing down a little bit.
Yeah, we will see. We will see. But yeah, Tom, do you have any favorite setups or anything like that? Because we covered all of the top stocks today.
Yeah, Facebook's moving up. I did want to bring up Twitter one more time, because I will say the past few minutes, they started to break out above their $39 resistance. It looks like it had a bit of a fake out and it came right back down. I'm definitely going to keep this on the radar, though, because with Facebook and everything rising, I think Twitter might have a pretty good chance to possibly break this daily high. And I'm also keeping my eyes, Mike, on Oracle. Oracle has been consolidating a lot down here at the bottom, and it's kind of in a setup that reminds me of something like Enphase. But something that I really like with Oracle, Mike, is look at that implied volatility. This IV has just gotten destroyed lately ever since those earnings. It was flying up into the earnings. We got up to 56%. Now we're sitting down here around 30%. So I feel like if this stock starts to break out here, it might be pretty well priced on the option. So I'll definitely keep this one on the radar, especially if we break out above 82.50. I'll be looking for a pretty good move eventually.
Good stuff. Well, thank you guys so much for joining today's stream. It's definitely another mixed day in the market, but I want to give everyone a shout out before we close out the stream. So thank you so much, Keisha, George, LSB, Carlos, Hunter, Mike, B Square, I Am Mike, Vicky, Raymond, who else? Sean, Jimenez, Mason, and I think that's everyone. So thank you guys so much for joining today's stream. Be prepared for volatility, especially with some of these stocks like Intel, AMC, Uber, stuff like that. There's definitely a lot of hype with those ones right now. Besides that, thank you guys so much for watching.